It was Yogi Berra, if I can paraphrase him here, who said prediction is a very tricky business, particularly with regard to the future.
Yeah, right. I love it.
What type of price target do you think is fair for silver?
I've written about it before, so to stay consistent, but it's very much along what you outlined, Chris. And if you just take the inflation-adjusted price, I did that study several years ago, 125-ish is the number. I don't want to quibble over, is it 130 or, whatever. And that's using the metrics, as you said. This is the government-supplied inflation data. But I think, and so after I did the article, I went on, and I stated in that article, by the way, it's called Engineering the Price of Gold. If anyone wants to look that up on the Internet, you can read it. I said, well, let's look at what happened in the last market. And if you do this study in gold in 1980 and you cover all the currency, M1, I'm not a believer that it's M3. That's credit, but I don't have time for that argument. But if you take my basis, which is currency only, and gold is a currency, and you divide the currency outstanding by the amount of gold the Treasury says it owns, 261 million ounces in 1980, a full cover, in other words, a fully gold-backed currency where you could actually go back to a gold standard, was $400 the ounce, yet we all know it peaked January 21st at over $850. So we know for a fact that during a panic buying situation, which is what it was in 1980, that it overshoots the theoretical gold cover ratio. Okay, it did it by double. We also know for a fact that even though it was an intraday high, that the ratio between gold and silver touched 16 to 1. That's a fact. No one can change that fact. Now, it's not like it lasted forever, but that's what happened. The reason it happened, and this is opinion, not fact, is that the people that were looking at the gold price accelerating like that were basically priced out of the market. And so what they did is they went to what was the next best thing. If they went into the coin shop with, a couple $1,000 and realized they're only going to get 2 gold coins, they said, you know what, I'm going to buy silver. I get this big bag of it. It's only, for $35 the ounce. So they bought it. And I think that'll happen again, except, as I said earlier in the program, instead of being, a U.S. phenomena, this time it'll be a worldwide phenomena. And again, that's going to happen when there's 1.5 billion ounces less silver available for investment. So, where do you think the price is going to go? So continuing on, if gold goes to, let's say, a cover ratio right now, and that's a tough argument, would be roughly 2,500. So if it doubled that, we'd say 5,000. And if silver went to the, monetary ratio of 16 to 1, you take, 16 into 5,000, get your number. So if we go 10, it'd be 500 silver. So let's cut that in half, 250. So is 200 silver, out of the question? No, it's not. But I'm a practical guy. Before you ever see, $100 silver, you've got to see 50 again. And we've only been over 20 for a little while, and we're not there right now as I'm doing the show, but we've been there. But I believe once you get above 25, and this again is my work and my knowledge of the commodity sector, that for all practical purposes, everyone that's ever bought silver on the planet owns it at a profit. Now, yeah, I know it traded above 25, but look at a chart. It was for we're talking days. I mean, the amount of people that were buying in were mostly in the futures markets. Oh, sure, there's some guy that's out there that's my age or older that might have bought some at 30, but it's for all practical purposes, 25 is the magic number. Once we hit that price, and it's like any market, but particularly the metals markets, everyone that owns it will not sell because they have now got a profit and they have one question in their mind, and their mind is how high is high. So they'll hold.
And there's next to no resistance.
That's
once you
right.
cross
there's
that
no resistance, and so any new buying will send it higher. So you could see once silver stabilizes around 25 for a few days, a few weeks, maybe a month, where any new buying will send it to 35 within a matter of weeks. And then once it gets 35, it's going to get volatile. And I'm just giving you the idea. I don't want you to focus too much on the price. I think the idea is what I'm trying to get across. But once you get above 25 and it stabilizes there and builds a base or whatever it does, you can see it go 35, 45, 55, rapidly. So that's sort of a key place to watch. And so my analysis on these markets, and particularly focusing on silver, which is my expertise, would be once you get from 25, it's going to go. And where it's going to go, I don't know, but it'll go. And it'll go, and let's just pick a number for discussion purposes. It goes from 25 to 70, okay? And then there'll be a big correction. I mean, let's face it, that's a big gain, especially for the people that trade fast and the, people on the floor and the people that trade electronically and everything else. And these markets are still electronically traded markets. I mean, exchanges are still viable for the derivatives markets, and that's what controls the price. Until they blow up, it's going to be there. So they go to 70, and then they sell off, and it goes back down to pick a number 50. We like 50, okay? So, and then it stabilizes, and it takes time, and, it'll stay there for a while. And again, my old adage of, scare you out or wear you out. But then something will happen, and it'll take off again, and that will be the last phase of the market, in my view. That'll be the panic buying, and it'll get back past 70 and 80, 90, 100, 110, 120. Can't go higher. 130 goes higher. It's up $20 today. I mean, you can imagine that. Silver up $20 in one day, reflecting basically what the gold price does on a good day. Will that day happen? I believe it will. Will it happen this year? No. Will it happen in 2011? Probably not. Will it happen in 2012? Possibly. But someday you'll see those kind of moves in silver. Will they last long? No. The hardest thing, for me, is going to be pulling the trigger at the top. I mean, the problem is that, I'm respected, I have integrity, I do my best, and a lot of us do. I'm not saying, that others don't. But when you get into a euphoric panic buying mode, it's very difficult to sell. And when I start to indicate we should start taking some profits, let's not be pigs here, let's leave some for the next guy and that type of thing, I'm sure that I'll be getting a ton of hate mail and hate email. And the truth of the matter is I've stayed cool, calm, and collected because I've been through the bull market one time. Yes, I was a lot younger, but I've been there. And I know that even in a fiat regime that you probably would be worthwhile taking at least some profits. Now, I do have a strategy for basically holding the metal and selling the stocks, and I don't have time to go into that, and I'm reserving that for my readers. And that's subject to change as well. I mean, I could tell it all now, and then it's worthless at the time because maybe the exchanges will be shut down for all I know. I'm not forecasting that, but let's face it. Did you see what happened in the cocoa market recently? It was over the last few days that a European entity purchased basically, for all practical purposes, all the cocoa available in Europe. They basically have cornered the market. These are situations, it's just an odd, I love my favorite word, interesting, which isn't my word, but I mean, interesting times. I mean, go back 2-3 weeks ago, if you asked me, well, any commodity market be cornered, and say, yeah, some could, and I wouldn't know it was cocoa, but that's what happened. Cocoa is a very small market relative to other commodities. But the rarest of the markets, why they're even on exchange, I don't know, are platinum and palladium. I mean, Butler always talks about how small the silver market is, and the silver market is small. But there's nothing smaller than the platinum and palladium markets. I mean, they're ridiculously small, but anyway.
Well, in summary then, I guess it's safe to say silver is still cheap.
Absolutely safe to say that.
For folks that would like to pick up a copy of the Morgan Report, your monthly letter there that covers economic news, financials, as well as more about silverinvestor.com, why don't you help them navigate their browsers?
I will. I'm going to do something for you, Chris, that I haven't done in a while. It's real simple. If you go to the website, which is silver-investor.com, type in a /free, F-R-E-E. So it's silver-investor.com /free. It's lowercase or uppercase, doesn't matter, free. And I will allow you full access to the Morgan Report for 30 days. So that's something I've done very rarely, but this has been a great interview, and I think I was able to make some of the more important points about why the market in silver is where it is right now, what I expect in the future, why it's very logical to expect it to do better than it did last time, and patience is involved. I mean, there's one thing about investing, and that's the other thing coming back to earlier, and I know we're running out of time, but, the ADD mentality, I have guys, and my letter's one of the cheapest ones out there, and it's probably, this is me saying it, so I'm biased, but I mean, I know what the other ones look like. Everyone in the gold-silver space wants to trade with me because they want my expertise on the silver market. So, I trade with almost anybody you can name out there. And I see everybody else's work, and I'm not putting anybody down. All I'm saying is what I give for the money spent is huge compared to what some of these other people are doing. So anyway, point being, if you want to take a look, you can.
Well, sir, it's always a pleasure hearing your thoughts, and we're going to look forward to talking to you again.